Welcome to Trading Lounge and the Australian Report, and what we're looking at here is the Australian banking sector, the XXJ, and I'd also like to have a look at CBA, Westpac and ANZ and compare that into the XJO. In this instance here, what I do understand in this XXJ here and also in the XJO, that the move that we have down through here is in 5 waves. So we were expecting a rally to come back to the 50 and the 60% mark in here and then move down from that point. Now, CBA was the first one to move up to its 61.8% mark, while this market, the ANZ and Westpac, really sort of lagged in moving up into their spaces, but they're getting up into their spaces now too here. It does leave the CBA a little bit higher than its 61.8% mark, this box here, but we did have this little gap here, and CBA does like to fill its gaps. And also too, we wouldn't, if I was wrong here, and I've always sort of stayed with this particular story, is that the 85 here, if that became the tested support, then we would trade it long at that point. But it would need to, give a classic trading levels pattern on that line there for us to do that. Now, it may trade above this a little bit, but actually finding support is another thing altogether. So when we look at the other markets, such as ANZ, for instance, here, it's only started to rally in the last few days here, and so basically it will look to cover this gap here, just under the $31 mark here. For the 61.8%. It may go higher, it may go lower, but what we're actually looking for is from wave B here into wave C here, is we're looking for 5 waves. It's a little bit hard to track them because of the gaps here, but I do think that well, obviously it looks like a nice strong third wave going up here, and maybe it can just continue up here, but unless they're all sitting above their 61.8% mark and they've got support there, then I just think that we need to be a little bit mindful of the situation, because it does appear in all cases that we have 5 waves here. So after an ABC rally to the 61.8% mark, then a move down as well. We also need to take, general sort of consensus on what's happening with other indices around the world. So we're expecting the Euro indices and the American indices to turn soon as well here. Obviously, this is tracking our currency up a little bit here as well. So for the Australian dollar here, from wave 3 here, we've been looking at an A wave, another triangle here for wave B here, and then 5 waves up for wave C here. And in this move up here so far, we can look at 1 and 2 and 3 and 4 and 5 here for wave 1 and 2, and then the third wave up to 80 here. So there'll be some sort of reaction here, and then up here, then that should top out there, and that should also see the US dollar index turn and do the mirror opposite, basically. So of course, in borrowing money for the Australian banks, the carried trade has always really been important, especially the yen Aussie carried trade in that sort of accessing funds for that. So this is sort of a reflection of that. The Aussie yen's doing much the same as well, but I won't go into the currency thing. My main point today is that the banks finishing off their little structures here. This is the same for CBA as well here, coming up into its level here at that close on $33 here, and so let's just see how this sort of ends off here. But at least you know where the 61.8% marks are, and they would need to have a tested support. So it's pretty much the same old story. So if that's the 61.8% mark here, then we would need to see the market approach it, probably react from it, move up above it, and then have some type of correction there, and then you would have your setup pattern, your signal entry, and then if it's triggered, then we go up from that point. But we can expect them to tire out that clump of price activity here is where the volume is sitting as well, so that's where the supply will be. So that's going to have problems. In this case here, it's quite nice because with WBC we'll be working with group 1, which makes it even better, because if it does find support there, then we know that we'll be taking these tops out here, because tested support on 33 gets us to 35. But if it's going to fail, this is where it's going to fail from in here. So just need to be mindful over the next sort of few days. And also too, we know that the finance sector, has got more weight in it for the XJO as well. So for the XJO as well, what I do know is that from the top here, we do have 1, 2, and then 1 and 2 and 3 and 4 and 5 for the third, the fourth wave pulling back to the fourth wave of 1 lesser degree, and the fifth wave down here. So we know we've got 5 waves down here. So we'd always been looking for a corrective pattern, and in this case, it's been a triangle pattern. I have got it wrong in here a couple of times, but I've kind of always stayed with it to a point, just wasn't ever quite sure how it was going to sort of finish off. One of the main points we had here is that if the 57 became the retested resistance, then we could short. In this case here, the reality is that it's moved through it, then the retest has occurred here, so that really leaves this as the signal area here, but it didn't come back down here to trigger that. So now we're looking back to the upside here. So the best fit that I can see here still is an A wave here, a B wave here, a C wave here, then an A and a B, and then 5 waves in the C wave for the D here, then an A and a B and a C wave here. I would need to see another move up here to finish this off if that was going to be correct, because the move up here so far is like it's only in 3 waves here. So we really need to sort of investigate this here a little bit. So we'll go to the tick chart. But the main things here that we need to really understand is that we do have 5 waves here. So after a correction, we'll have the other 5. Secondly, this is a corrective pattern because the first move up here is in 3 waves. There's an A and a B and a C here. So it makes the rest of the pattern corrective, whichever way you count it. So what we're trying to do is trying to find out where it sort of finishes, and this is another good case for the market to be finishing in here. In fact, it could also be finished right in here as well. It's just that we expect Friday in Australia in a bullish market like this to be moving upwards as well. The other count that we've looked at this here too is, if I can just borrow these for a moment, I'll just move that there. That being an A wave here, a B wave here, and then a C wave coming up here even higher into the 61.8% mark here, and maybe even a tad higher. And that's possible as well while the banks finish off their business as well. But I see this trend line through here is topped in yesterday's high here, from this high here to this high, so that's why that's where that is as well. But at the same token as well, that's the 5750 is the midpoint here. So if that becomes a tested support, then we can trade long as well. And as you can see at the moment, it's pretty much done. It's had the arrival, the reaction, the first high above the level, and then the corrective pattern. So in a nutshell here is that, if I can just delete that one there, if we take one of these highs here, if the market breaches that there, well, then that would be the safe trade to go long at that point, and we can look at that in a moment. But I can also see this being a top, and I could see it working down through here. And we'll look at that where we can actually sort of short that, see if the case. But normally we'd find Friday the bullish day. So if it's not bullish today and it ends up being bearish, then we've got a change in trend. That's what Friday tells me. If it's not going to be bullish, then it's not going to be bullish on Monday. If it's going to be bearish today, then it's going to be bearish on the Monday. It will follow through in that way. And you have to remember the S&P 500 is sort of coming close to its tops as well, and so is the Euros as well. And we can look at the bank. So there could be some more upside, but we're looking for downside in this instance. So if we go to the tick chart and just move in on this little area here, the move up here so far, I can count 5 waves in this first leg here. So look, it could be wave 1 here. This has got 5 waves moving down here. This is on 100 ticks here, but if you go to a 20 tick chart, you'll see it much clearer. So we've got 5 waves down here. We've got 3 waves up here. So that's B, and then we've got a small 5-wave sequence here. So it does fit as the A, the B, and the C wave here for the B wave. So basically an A wave, an A, B, and C for the B wave here, and then up for the C wave here. Now, it could also be counted to, in line with the banks, if I can just copy that for a moment, and have that there as wave, whoopsie-daisy, wave 1, and then copy that and have this here as wave 2 here. So now we've really got to start talking about what's going to trigger certain levels and targets to prove things. So this can be wave 3 here, but as you notice with wave 3 here, it's much shorter than wave 1 here. So what that would mean that wave 5 is going to be smaller. So when we look at copy wave 5 here, we could put it close in here somewhere. So we could have this here. This is 5 waves here, okay, so it's 5 waves. So after an ABC correction, in this case, here we could use, let me think the best way for this to go. Well, it can be the A wave to here, the B wave to here, then 1 and 2 and 3, A, B, C for the 4th and down for the 5th here, and then up. So an A and a B and a C wave to here. It could also, if it doesn't make a new low here, it could also be counted with 5 waves. Here's the A wave, then an A and a B and a C here for the B wave, and down for the C wave. But I think I prefer the first one. But either way, this here too is the little box here, the retracement level that we don't want to see it go past here. So if I put this here, for instance, that's on 5740, just to round it off a little bit, okay? So if this here, in the first instance here, if that becomes the retested resistance here, then you can trade down to the 5.7 here. There will be a bounce here as well, and this is also the 61.8% from that low here to that high here. So technically it would really only be bearish if it was really under that there as well, because this triangle may just sort of continue to be a larger sort of pattern. But yeah, so yeah, that would make that wave C up here, and that's where that would finish. And this is kind of what I was expecting for the banks as well, one more push up for the banks, and then start weakening at that point and then rolling from that point. So let's see how we go. So as it stands at the moment, the long trade would be, well, above this level here. So I can't draw on that side there as such. Past the price, I can't draw on the tick chart past this price. So that's the trigger for the upside here, and the downside here would be the, if I could just copy that, and if that becomes the retested resistance there, then trading that to there as well. Also too, just while we're at it, just want to find have a quick look at Rio. I might just have to bring the trading levels charting program up for this. So this is Rio here, and I'll just put, that's the medium level here. What I was sort of finding interesting about Rio, what I do understand is from this high here down to this low here, we got 5 waves, okay? So we've got 5 waves to here. So then we've got this move here, which is a little bit overlapping wave structures and so on. So it really makes this whole leg down here corrective. So I always figured that would be taking the top out here in due course, okay? So this would come down as an A wave here, and some sort of B wave to here or to here, and then down. So basically it's an impulse wave to here, a corrective pattern to here. So, but what bothers me about this now is that in this move here, we've got 3 waves up here, making it corrective. We've got the B wave coming back, making it corrective, and we've got 5 waves up here. So it's quite possible that this can just get a bit bigger and uglier now as well. So basically an A wave to here, an A and a B and a C wave to here. So that would actually bring it down here further. Because we've got 5 waves here as well in this little section here, what this does is that it does make it that if this top here is taken out, and we may see more price activity in here, then if that's breached at the top here, then we can go, well, you can go long from that point. This is the 65, the medium level here. So you can go long from that point there. So I just wanted to point out that I thought that this would be a reasonably simple sort of correction here, but it's just getting a little bit more complicated. So what it can do here is that it can pull back, let me just get this, it can pull back to this space here. Let me just draw this out here. It can pull, oopsie daisy, leave that there. So it can pull back to that 61.8% mark there, and then it can move up higher from that mark, and we can look at 72 would be our first target up there, of course. But also what bothers me about, so 62 is really important here as well, because 62 really, in terms of geometry, is the 61.8%. The other point that the market can do here as well, this is why you've got to be careful, because if this can be an A and a B and a C. So basically an A wave down here, a B wave up here, and then a C wave coming down here further, down into 58, these lows here, and then moving up from that point there. So you'll just have to be a little bit extra careful in this space here. Such. So yeah, anyway, that's the trigger for the long trades up there. Let's see what we get if it pulls back to the 61.8% mark here, or it can have 5 waves down here as a C wave, so an A wave, B wave and C wave here. I just thought I'll chuck that in there because there'll be other iron ore stocks doing the same as well here. All right, I'll leave it at that. Thanks for tuning in. Cheers.